Hello, friends. Welcome back to our weekly roundup of tax and corporate law updates for week ending on 26 October 2025. Let's dive straight into the key highlights that you need to know. We begin with the Income Tax Act. The Ahmedabad Tribunal, in the case of Bakery Projects Private Limited versus Deputy Commissioner of Income Tax, delivered an important ruling. It held that when a company enters into a scheme of amalgamation and recognizes goodwill in its books due to excess consideration paid over net assets, depreciation on that goodwill is allowable. This is a significant clarification for companies involved in mergers and acquisitions. Next, the Chennai Tribunal in Mother Leela Trust versus Commissioner of Income Tax Exemption addressed delayed applications for registration under Section 80G. Even if the application was filed after the due date, thanks to the Finance Act 2024 amendment, such cases will now be considered under the new clause, treating time limits as directory rather than mandatory. This is a relief for trusts and charitable institutions. Another Chennai Tribunal ruling in Alternative for India Development versus Income Tax Officer clarified that if a trust registered under Section 12A files its audit report on time, exemption under Section 11 cannot be denied just because the return mistakenly mentions Section 1023C instead. Accuracy matters, but genuine errors should not cost exemptions. Moving to Mumbai, the tribunal in Rishabh Instruments Limited versus Principal Commissioner of Income Tax held that CSR donations made to entities registered under Section 80G are eligible for deduction under Section 80G, even though such expenses are not deductible under Section 37(1). This is a big takeaway for companies planning CSR activities. Finally, the Ahmedabad Tribunal in Rajesh Narendra Bhai Patel versus Income Tax Officer ruled that if you invest in a new residential property using your own funds, you can claim exemption under Section 54, even if the property is purchased in your spouse's name. This is a practical interpretation that benefits taxpayers. Now let's move to GST updates. The Bombay High Court clarified that when both state and central authorities issue orders and appeals for overlapping periods, the taxpayer can submit state orders and appeal details to the central authority, which must consider them before proceeding. No blanket quashing of notices at the writ stage, but procedural fairness is emphasized. The Chhattisgarh High Court struck down a provisional bank account attachment under Section 74 because the notice lacked statutory references and reasons. This reinforces that authorities must follow due process. Another Bombay High Court ruling set aside an appellate order dismissing an appeal for shortfall in pre-deposit without giving the appellant a chance to rectify the deficiency. The matter was remanded, highlighting the importance of fair opportunity before dismissal. Finally, let's cover corporate and other laws. The Andhra Pradesh High Court upheld a trial court's acquittal in a labor law case under Section 14(2), noting that the prosecution failed to prove who had ultimate control over the establishment. Evidence matters, and lack of it can't sustain conviction. In Rajasthan, the High Court quashed a conviction under Section 138 of the Negotiable Instruments Act, after a compromise between parties subject to payment of 7.5% of the check amount as cost. This shows courts encouraging settlements in check bounce cases. Another Rajasthan ruling under the Rights of Persons with Disabilities Act directed authorities to release withheld salary and reimburse medical bills for a government employee who acquired a significant disability during service. The court emphasized compliance with Section 20(4) and Article 21, ensuring dignity and timely support for persons with disabilities. That's all for this week's updates. These rulings shape compliance and interpretation, so staying informed is key. If you found this useful, don't forget to like, share, and subscribe for more legal insights every week. See you in the next update.